Hello and welcome to Echo45 Advisors Market and Economic Update. The stock market has achieved several new all-time highs this year as the market rally from last year has continued. In this video, we'll discuss what's driving these returns and what it means for everyday investors. First, the fact that the market has fully recovered from the bear market of 2022 is positive news for investors. Markets have already hit several new record highs this year. That said, we understand that some investors may feel antsy with the market near a record level. Underlying these concerns is that markets may reverse course. However, this chart paints a different story. Since markets tend to trend upward over a long period of time, it's also the case that bull markets tend to experience many new all-time highs. You can see that from 2013 to 2021, markets made dozens and dozens of new records each year. The point is that new all-time highs are not in and of themselves reasons to be worried about the markets. Instead, we should focus on the business cycle and the underlying fundamentals. That's exactly what this chart shows. The latest GDP figures for Q4 2023 were far better than many economists expected, with a growth of 3.3%. You can see on the left that GDP growth has actually been steady since the second half of 2022. In particular, the personal consumption expenditures bar that shows consumer spending has been quite strong. Business investment, labeled here as gross private domestic investment, has also contributed positively to growth. The fact that growth has been strong is an important reason markets continue to trend upward. So, for investors who are worried about current market levels and would prefer to wait for a pullback, history shows that this can often backfire. This chart shows how long an investor would need to wait for a particular sized pullback and what the opportunity cost would be. For instance, waiting for a 3% pullback would require waiting 69 trading days. Historically, markets would have gained much more than 3%. So it would have been better to simply stay invested the whole time. Of course, this doesn't mean that markets will move up in a straight line. The takeaway is that market recovery is positive for investors, but there's still uncertainty about what may come next. We hope you found these insights valuable. If you'd like to discuss any of this in more detail, please don't hesitate to reach out. We look forward to hearing from you.